All right. Good morning, everyone. I believe you can hear me. But on my certain by this time, it was due to certain things, right? So yesterday, all right, yesterday we talked about having your goals and um planning yourself well. All right. That's all we talked about yesterday. Just a few things. Basically, this is a summary, all right, of our session yesterday. All right. And we went ahead to talk about how to simply follow your rules and of course follow your trade. And funny enough, this particular trade took us out before making this move. So in one session, you could actually see that the market letter did what we said it's gonna do. Right. So we had a target point and it finally hit the market, it hit the target, right? Before moving. Now, just building on what we talked about yesterday, right? I assume this is a new day. I'm about to review what yesterday was or how yesterday was, right? So I can say, okay, why was I taken out before the market made this move? I can't see any valid reason, right? Remember, I also said um, when I know that this trade is confirmed, also, okay, when I can enter on that entry for this particular trade is when it has broken this low value. And you can see just at the point it was broken. Those are the points it was broken, okay? I don't know what's wrong with my mouse, honestly. All right. Just as a point was broken, it went back up to our original entry. All right. So this would have actually been a very good trade, perhaps. Yeah. So your work now is to start looking for an entry. I'm coming. Your work is now start looking for an entry around here. All right. So let me see what we're typing here. I can use this strategy these days. Mostly gonna check and looking for reason. Yes. Okay, one question is, have you been following up on all the sessions? That's number one question. Because if you have, you should have known what FPG is. Okay, well, let me ask, perhaps there might be other persons in your shoes, right? Please, is there any other person on this call that doesn't know what a fair value gap looks like? I'm just asking. Any other person on this call that doesn't know what a fair value gap looks like, right? Any other person, just indicate. Okay, if you know what a fair value gap looks like, indicates. So I'm not those that indicates doesn't know what this or don't know what it's about. Mm. You don't need to be sorry. You don't need to be sorry at all. All right. Okay. I think perhaps the best thing here is to go over some of the videos in the past. That's the best thing. Like that's the best thing I'll do. I'll check some of these sessions and I'll send you the recorded, right? They'll help you. But perhaps this session you can still get something anyway, right? Just listen through. Okay. So like I was saying here, since this flow has been broken, this is a Q, right? Watch this 15 minutes time frame. before we go back to see why this trade took us out anyway. This is a clear uptrend. This is a high. This is a low, rather, a higher low, higher low. This is a last high, right? For a change in trend, you need to see a lower low, right? And that happened right here. So for the 15 minutes time frame, this is when this trend actually shifted, right? So since this has happened, right, next thing we're gonna do is to start looking for possible entries around here. So you can write it down to any point you're looking at, right? So are we seeing any fair value gap on this? Not really. Well, that's one we now have to go down to 1 minute time frame. Sorry, the 5 minutes. We get down to the 5 minutes. Get down to the 5 minutes. I think I should clear this. Okay, I just need it for emphasis. All right, I need it for emphasis. I should clear the this. Am I seeing any fair value gap here? All right. So here, in fact, the market moved, came in here. So some of the fair value gaps I'm seeing here are, if I'm to extend this line to the very point it broke, that should be here, right? So my case are whatever that is happening here. So I'm seeing like this is fair value gap one. This one has been retested already. Let me just show you. Ooh. So this is the highest fair value gap that is close to our original entry, right? This particular one over here. I don't know what's wrong with my mouse. You don't even get this stuff. Should be this way. All right. Now, to make it clear, the space between this particular candle and this particular candle, the space between this and this is the tip, the low of the first candle, right? And the high of the third candle. So this is the highest fair value gap we are seeing on this particular chart, right? Me in person, I might say, you know what, the market might not, right? Get back to this point. Let me work with this lower one here. And I start to work with this lower one here. But the only thing is that I'm going to have a larger stop loss, right? I'm going to have my stop loss above this zone regardless, or above this high. Right? I start to work with this one here. I have to, because if I decide to work with this fair value gap here, and I decide to keep my stop loss at this high, right? I have a fair value gap above here. There is a possibility of the market getting back here before going down. So since I don't want to take that risk, right? And since I want to wait, because the market, not all the time, this reaction doesn't always happen. The market doesn't always come back to this zone to react. Sometimes you just rest at this top, this fair value gap, and start selling, right? Now, imagine, even if you missed this one, here's another entry for you still. Right, so it was a crazy, amazing trade yesterday, regardless. Before the market now tanked crazily and, give us what we wanted, right? So now, back to the reason why it was taken out before. A minute, please. Right, a minute. Now, this is the reason. But I actually saw that yesterday while on the session, but I chose to ignore it. There was a fair value gap this market went to respect before making that move. Did he even get to it? I'm not even sure. But this is the case, right? As I said, that stop loss was a risky one. He didn't even get to it. That's one funny thing. I didn't even get to it. He went to this side, just respected this side, this double top, and started selling. So we took our entry, set it above here. So it would have been best to have adjusted this stop loss at least above this high. All right, so when we got our entry at this, I'm correct about what I'm showing here. Yeah, when we got our entry at this first February, this was our entry for this trade. We came in here, we took our sell. This was our entry for this particular trade. This first February gap, right? This was our entry. Because I checked this one has been respected already. If you see this space between this and this, it has been respected. So I chose this, ignoring this, right? Now, here's another thing. If I waited for this, the market won't get to it. I've seen. So sometimes you don't need to wait for that premium entry. Get the one you can get, enter. The only thing is adjust your stop loss to cover. So if this has been here, it would have been a good trade, but perhaps we left it at this high and got taken out, right? So that is it. This is the last of the month. And this is a time to, of course, spot some errors, make some corrections, get more insight, and the rest. So, Bambi, okay, this should be Bambi, right? Unmute yourself. Thanks. Let's hear you. You can unmute yourself now, Bambi. Okay,
Good
yeah,
morning, sir.
good morning.
Okay, what I want to ask is very complicated.
Okay,
Mm, Okay, I'm not actually good in using these Zonda strategies. I've watched the videos. I don't know. Maybe my trading view doesn't allow me to put about three indicators in one chart. That's because I'm using a trading view that I downloaded. I
yeah,
don't know if there's a difference between the one you downloaded and the one that you're using normally online. Is there
no,
a difference?
it's the same thing. You can't have more than three, you can't even
Like,
have more than two indicators.
but when coach was explaining that day on the this thing on the videos I was watching, he put like three indicators.
Me?
Okay, no. I mean Coach Michael on the YouTube videos I watched on the Zonal strategy training.
Yeah, that was like then. Before now, you can have up to 10 indicators, but now you just two.
Okay,
Yeah.
that one aside, now the FVG that's actually confusing me. I want to
Okay.
know the particular February gap that says this is when you go back and go for your buy, or this is when you go for your sell. Is it like the first and the second candle? If it's green and the middle one is red, you're going for a buy,
Okay. Or what?
or if if the two sides are red and the middle is, or if and the middle is green, it means a sell. Like I want to know the particular kind of candles that says this FVG gap is for a buy or a sell. Don't mind my
Mm.
voice. I'm just
Okay. Let me break that down for you. After all, that's what today's session is. This is the last day of the month, so there are room for questions. So we can have more clarification in certain areas. Okay, so let me break it down. Certain AVGs, right? That's what your buy move or sell moves is simply, first of all, right? Like I said, first of all, you can see FVG for either buy or sell on any trend, right? So looking at this particular trend, this is a one minute time frame. Okay, this is 1 minute time frame right here. But do you understand that? Let me. Do you understand that FVG is just an imbalance, just a name given to an imbalance in the market, right? When there is a space between two candles, sorry,
Okay.
when there is a space between um the space between three candles, that's what an imbalance is, and that's what a fair value gap is, right? So the thing is, whenever you see a space, there are more funny thing. Okay, let's use this movie as a case study. How many candles are we seeing here? We are seeing one, two, three, four, five. Right? Assuming you want to take a buy, assuming you want to take a buy, you can, as crazy as it is, draw out. First of all, you can pick the first zone. The first imbalance is this here and here. In fact, let me use, I think this should be better. The first imbalance is here, right? This line should be accurate. And here, this line, they are not straight. First imbalance is space between this and this. Second one is space between this. I'm not color for it. This and do you actually know this first? That's number one. Do you even know how to even spot this sense? I'm asking you, Bambi.
No,
You don't even
no,
know
sir.
this. Then you have to go through those sessions now. The third imbalance is point A and point. So this is the largest. Okay, yeah, we have like four. One, two, three, four. I've told us, right? When you see a situation like this, assuming you are looking for a buy here, don't go for the first one. It is too early, right? Either go for the second or the third. Don't go for the last one. It is too late. Do you get me? The situation you see like five, six, three. If you see three fair value gaps, go for the middle one. If you see two, okay, you can go for the first one. But make sure your stop loss keeps you at a very safe distance. So in this particular case, I cannot be going for the first fair value gap. If you look at it, right? If you look at it, it was respected right here. Imagine I'm looking for a buy here. I enter at this point. Where am I looking for? Assuming I'm looking for a buy, right? And I want, of course, my target should be above this high. I want this high to be taken out. Assuming I'm saying that this is an uptrend. So I enter here. I have where will my stop loss be? Where will I start? In fact, where will I start and leave the other? Should my stop loss be here? I have a fair value gap below. Should my stop loss be here? I have a fair value gap below. Where would I enter? So it is quite risky entering at the first fair value gap because there are other fair value gaps that has a high tendency of pulling the imbalances are like magnets, right? The market tap into them to catch liquidity to move, all right? In fact, they need to be balanced out for any movements to happen. Okay. So having your entry at the first one is quite risky, right? So you want to start as a safe distance, but not too late. Dead zone, dead zone. The first and the last dead zones. Choose anywhere between the middle. And what did you see here? The second was actually okay. The third, actually okay. So if you entered here, have a stop loss somewhere below this point. Oh, this is another fair value gap even. This is another one. I didn't even see it. This is another fair value gap. this area over here. So with this being the case, right, we are going with the third one. That is it. So in this case, we have like 1, 2, 3, 4, 5. We're going with the third one. And as you can see, third one is like the perfect, right? The third one is like the perfect. Take it, who's that third one, sir? This is it. And just my, and also remember, yeah, this is just a type of trading. It's not the other strategies. If at the end of the day you don't really understand this, it's okay to leave it. Focus on the ones you can understand, right? That's one other thing, right? You can go with normal support and resistance. They still give you the idea you want. You can go with normal support and resistance, right? If you don't get to understand it. Okay. So with this being said, we have like I said, 1, 2, 3, 4, 5. We choose the midpoint. And you can see the middle fair gap is like the best entry, right? The market like played well. Assuming this is an uptrend. Okay. Let's say your CP is above this high. Boom, you market hit your TP and you're out. Even if your supply is like somewhere down here. At least you're good. All right. So on that way, let's clear all of this, so the chart doesn't get so messy. Right? Another way to stop it. So, like you're asking, which one is for buy? This one I just showed you now is for a buy trade, right? So to get a bearish order, um, a bearish fair gap is, in fact, I've not even talked anything about other blocks, but let's leave that one aside. Let's leave that one aside. But sometimes that's also something to look at, but let's not even talk about that for this month. Perhaps next month. We'll focus on all that type of trading. Maybe favorably gap in pattern with other things in the chart, right? So if you're looking for a bearish favorably gap, what are you looking for? Let's say perhaps you came into this market at this particular point. You came into this market and this particular point when the price was here, or let me say when the price was just here, right? We're like, what am I seeing here? So ignore that this move happened. Just ignore that this move happened. What am I seeing here? I'm seeing my first imbalance, one, I mark it up and keep. This is my first imbalance, right? Space between this and this. Okay. The second valid one I'm seeing is this. The space between. So my point is, once I see this is my idea to start selling immediately. But it will be risky of me to take my sell here. I have my stop loss just above this high. Remember, when you review your trades, you see things that happen, so you don't get to repeat them. Remember, if I decide to take my stop loss here, what happened to me yesterday will happen to me again. Are you seeing it? The market came back here to respect a former leader. So if I decide to enter at this point, my stop loss should be above this high. So I know I am safe, at least. Right? But if I don't have the balls to do that, I can simply wait for my entry here. So it can either be if you activate, fine. If you don't activate, I'm good. I'm not gonna die, right? And some trades you set, if it comes there, fine. If it doesn't, I'm good. So that's to be operating from a safe distance. This is like a clear favorite gap in here. And what can you see here? This is a bearish favorite gap. The market came in here, sold aggressively. If you enter there, have your stop loss here, you're gonna be on the hit for like 2 minutes. This is 1 minute time frame. You're gonna be on this for like 2 minutes before boom. All right. And of course, sales, have your target on whatever your target is. Whatever I'm just looking at, whatever your target, if your target is like this low, good profits, if taking your trade, and this is just early this morning, good profits, you're out. All right. You're still looking for now, looking at this market now, the market is buying. You're like, okay, where will I enter? Where will I enter? Where will I enter? There are so many fair value gaps here, so many of them. We have fair value gap one. That's if you want, if you are looking for a buy, you have one right here. We have, okay, this one has been respected, right? So since this one has been respected, there's a high probability that it cannot come down here again. Let me show you what I'm saying. If you're not seeing it, right? These ones are not the perfect, but you can see, you can understand. These are 1 minute time frame, so this one has been respected. So this has been a very good entry for crazy buy. Whatever your target is, your target might be this support here, this support zone here, or your target might be another fair value gap set. Your fair value gap, I did a session where fair value gaps can be your entry and your exit, right? There's a fair value gap sitting above here. If it hasn't been respected, I think it hasn't been respected. You can use this high as your target to take your trade. And boom, once it gets there, you're out. Oops. Right? These are bullish fair value gaps. There are still many of them. If you're looking for more, this is another, right? These are bullish fair value gaps. Where there are possibilities of the market coming back. This is another one. This is another one, right? But like I said, this would be too early for you to enter. This would be too early for you to enter. This would be too early because the market can still come back, take you out. All right. This would be too freaking early for you to enter. Assuming you're looking for a buy in this particular trade. All right. I also had a session where I talked about merging um what's it called? Fibonacci and fair value gaps. These also tell you zones to start looking for entry from and zones to even avoid. All right. If you're looking for either a buy or a sell. Okay. So that is it about it. Any other question? Any other question? Any other question? If that's the case, you can actually say, okay, I'm in my Zen pian. You enter. Whereas there are other, in fact, in this particular, in what I'm seeing here, but I'm excited to work with this zone down here. Wait for the market to get back here. As if I'm looking for a sell, but looking at this trade, right? This is like a clear, this is a downtrend now, right? Looking at this trade, this is a downtrend. So the market actually did what we call a pullback and it's about to continue selling, right? So, so Bambi is the fair value gap thingy play now. Like, can you say that you have a handle on it? Just a little. Can you say you have a handle on it now? Just a little. I know it. Uh, of course not. That's the essence of the whole thing. That's the essence of the whole thing. There are so many kinds of trades here. There are trades. This is in this particular trade, you you don't necessarily need support and resistance, right? All you need to do is be able to know your highs and your lows. That's the most important thing here. This is your low. This is your high. This is your low. This is your high. This is your low. This is your high. If this low is broken, if this low is broken, you know that there's a switching trend. So if you're looking for a buy, start looking for a sell. That is that thing. So if this low is broken, start looking for sell. All right. Or the market did a little pullback. Okay, and started selling. All right. So this time around, we have a high. This is the low, right? So we have now what we're having now is a lower high. That's what just happened now. So in this particular case, we are looking for a lower low right now because the market traded from this point like way down here, right? If we decide to use, okay, now we can decide to use this low instead, so, right? So this is a low, this is a high. Get it? Low, high, lower, a higher low, a higher high. Then what happened? The market came and broke this low, right? So in this case, you're looking for now you're looking for a sell idea right now. So the market kept on selling. So for us to get a sell idea, we need a pullback. And that's what happened here, a pullback. And of course, for a good entry, right? A pullback for a good entry. So if I decide to start looking for a sell idea on this trade, there's so many opportunities to enter for sales. But I'll be more comfortable around here. I'll be more comfortable around here. I see this around here, or take a leap of faith and wait for the market to get here, which is possible, but I don't know how possible it is. Right? This is another interesting zone too. This thing, why is it so hard? This is another zone, right? But it's been respected before. So I can perhaps just use the high, right? So this is another interesting zone. So I'm looking for a sell here. But I don't want to talk about fair value gap on this chart at all. But with a fair value gap, I can know the zone I can be looking for my entry at for a sell, which of course lies within this area. In fact, let me show you now. It's that simple, right? If I'm looking for a sell on this particular move, like from this point to this point, it's anywhere above here. And of course, the market has got into that zone, and I'm good. Since I've seen the market break into this zone here, I'm going to take my sell. My target can be just this low or anywhere lower than it, above the 50 zone. That's where I'm taking myself from, right? So in this case, I wouldn't concern myself with. In fact, my idea would be I want this fair value gap here to be broken above. I'll look for if I can see an entry above here. If I don't see any, in fact, that's where I'll be waiting for the trade. And I can see the market broke, came into this zone, right? Any crazy entry here? Nothing really, just a last high. I need a more confirmation. And I would have entered just at this particular point. Immediately this high was taken out. That's the market for you. Remember the rule of manipulation distribution. When the last high is taken out as though it's buying. So my point would be at this point, particular point, you get in, take your sell, hide your stop loss above here, then you're good. Right? So this one is going to look like how to take that trade. Enter here, hide your stop loss just above this point. Then you can start to target the low on this. That's 1:2. That's actually a very good trade. You wait for it. All right. Even if the market comes back here, you're not being taken out because this is a fair value gap and your stop loss is above. So I'm telling you this because there's a probability of the market still coming back here. right? But at least you know you are operating from a safe distance. One is to it's a very good trade. And if you want to extend it even more, can use this, you can still use the fair value gap, right? Sorry, you can still use the Fibonacci. Sorry, yeah, the Fibonacci. Do a little setting. Target minus 0.5, right? Yeah. I see, you know what? Let me target minus 0.5 and wait for it and see if it's gonna get there. Wait. Because if this actually a downtrend, this is low, must and should be broken. You get the idea now. It's actually a downtrend. This is low, must and should be broken. Okay. So that's about that, family. I hope I won't confuse you even. This is also happening right now. The market just quietly came back to this fair value gap and respected it. That's the market for you. Well, anyways, that's about that. So on your own, you can monitor this trade to see if it finally made this move. Remember, should I type out the price for you? Let me just type it out. Entry. Entry is what? One 1.315454 within say 5 votes. Just watch this for a minute. Entry. Please just observe it. Let's see. SL. SL should be what? 1.31546. TP. TP1. 1.31418. See. Observe. That's the goal of this. Observe. 1.31434. Observe. We'll perhaps talk about this on Monday. All right. So observe. So you're risking how many pips? Interesting. 2.8 pips. Right. 2.8 pips. That's roughly 3 pips for how many pips? For roughly 10 pips. Right. So that's it about that. I read about that. So 1:3. So family, that is for it. Right. So have the best day, an amazing week, amazing weekend. Right. Cheers to the best. All right, let's watch this one play out. Let's see if we get taken out. Currency pair GBP USD, GBP USD,